welcome back. We'll now focus on Escobar's, a stock which has been raging ahead today and has been a volume buster for quite a few trading sessions this week. The big story driving the stock, the company has announced an IPO for its flagship brand, or at least said that it's planning an IPO for its flagship brand, Reid and Taylor, and the value of the business is pegged at about 800 crore rupees. The stock's up about 11% today, and if you look at a week, it's 24% up. We are now joined by Nitin Kasliwal, Managing Director of Escobar's nationwide. Mr. Kasliwal, thank you very much for joining us today. And you can see the movement in the stock. There's a lot of excitement around that planned public offer of Reid and Taylor. So let me start with the fact whether we've got the fundamentals right, which is 6 to 8 months is when it's been planned, and 800 crores is the value that you're looking at.
It's a pleasure to be with you on your program. Well, of course, we're planning an IPO for Reid and Taylor, which is a subsidiary of SKNL. And this is a listing IPO which is being planned in the 6 to 8 month horizon period. 800 crores, I don't know what value you're talking about, but 800 crores is not a number that we've been talking about. We are looking at raising about 100 to 125 million dollars, and that is because, you know, from a listing perspective, there's a minimum amount of money that needs to be raised. The subsidiary Reid and Taylor has been valued by GIC when GIC invested into it in 2008 at 840 million dollars. And for that value, they've put in $210 million for a 25% equity stake. So that's the correct perspective of the value of the subsidiary, and the listing is being done in 6 to 8 months. Yes, we are hopeful of that.
All right. So you're saying about 120, $150 million is what you are hoping to raise from it, and you're saying that the minimum amount is what you would divest. So just give us what's your own perception in terms of how much would you let go with this public offer?
You see, the thing is, like I said, the objective of this IPO is a listing. It's not a fundraising exercise at the moment. Now, our investment bankers are already working on it, because there are certain criteria that need to be, adhered to from a listing perspective. So, but we'll be clearer with this, the exact values and the numbers in the next couple of months. However, I presume it will be in the region of $100 million at least.
Right, Mr. Kasliwal, good afternoon. Ira from the Bombay studio. I'll just focus a little bit on the...
Hi.
Sorry, you were saying, sir?
No, I was just clarifying another point, that SKNL currently owns 75.5% of the subsidiary Reid and Taylor.
All right, fair enough. So I just want to switch to the actual fundamentals of the textile business. And, we were earlier talking to a pharma player, Mr. Piramal, and he was talking about a final revival coming in CRAMS, one sector which has been lagging. Textiles has also in some ways been lagging. Nobody entirely sure whether order flow, especially from abroad, is picking up. Is that turning around a little bit or significantly?
You see, as far as the industry is concerned, the clothing and textile and apparel industry is concerned, it's a two-pronged program. One is, of course, the export markets, and one is the very large domestic consumption story. Now, SKNL as a company has always been, we are the largest players in India, and it's been a domestic story so far. We are the largest, widest, deepest distributed textile apparel clothing company in India. We are vertically integrated. We are laterally integrated from manufacturing to retail. So we have everything in our ambit. We are a very large retail player as well within this segment. Now, on the export front, of course, orders are picking up and the export markets are looking up. But we are approaching the export markets by acquisition of companies in the overseas markets which are dealing with the middle and upper end of the markets abroad. So for us, the profitability levels are very high, because we are actually catering to a much higher market segment where the price realizations are higher, and therefore even the margins are much higher.
But you do still have a significant portion of your revenues which comes from the international side, right? I mean, I have a number of 45. You can correct me if I'm wrong. Is that then changing? Correct. Do you focus more on domestic?
No. You see, you're not understanding. There are two aspects. We have acquired 3 companies overseas. These companies contribute now 45% to our total business. But these overseas companies are dealing at the middle and upper end of the direct consumer markets. We have branded businesses in Europe and USA that are dealing at the branded end of the market. That system is using India as a high quality, low cost manufacturing as a back end. So the telescopic margin is very high. On the Indian front, we are continuing to expand our focus in India. We are already in 35,000 stores countrywide. We are in over 700 towns and cities. We're adding more brands. We're adding more distribution. We're adding a couple of new brands this year itself. One is Kruger and Reid and Taylor, and another brand is World Player in the SKNL stable. So we're adding 2 more brands in the current year itself. So we're expanding our market scope in India. The consumption story in India is very strong. The apparel and clothing and textile business is growing at about 12 to 13% per annum. And this is likely to go even further as our per capita consumption increases. So the India story is very intact, and the India story is being pursued by us in a, in a very systematic and aggressive manner.
Mr. Kasliwal, then just elaborate for us how much capital expenditure would you dedicate to your retail expansion domestically, and would it all be funded through internal accruals, or would you look at raising funds also?
You see, SKNL as a group in the coming year will invest about 700 crores between fixed assets, retail expansion and brand building. Plus, we are also going to be expending some amounts on increasing our presence in international markets for our brands. Now, this 700 crores will be a combination of internal accruals, some debt, and maybe some equity. It will be a combination of all three. Though currently we have enough capacity to take on complete debt, because our total outside liability to total net worth is at 0.93 times, so which is a very, very healthy level. But given our philosophy and status that we are going to be maintaining a 1:1 debt equity going forward, we are looking at raising expending this money through internal accruals, part debt and part equity.
All right, Mr. Kasliwal, thanks so much. Appreciate you taking the time to speak to us, explain some of those issues at play, Reid and Taylor being the immediate trigger, but broadly speaking, the domestic market story, the big one for Escomars, and they're ensuring that they continue to grow that market. They're already the largest, very, very systematically. Moving on, we've also had a number of other big corporates speak to us on significant stories on profit today. We'll start with Pipavav Shipyard. That's a bit of a negative story. What we understand is that Golden Ocean has actually taken them to court, the arbitration being there in Singapore court.